Now we're about to start session 4, which is the last session of today. And it's a panel discussion in relation to Fintech 3.0, and the title is Getting the Regulatory Environment Right. The moderator for this panel is Mr. Nigel Cassimire, to my left. Mr. Nigel Cassimire is a telecommunications engineer with over 30 years of experience in the operational and executive management of telecommunications technologies and services, with practical experience in networking, planning, network operations management, and telecommunications policy development. Mr. Cassimire has functioned as a consulting telecommunications specialist since July 2005 and has worked extensively with the Caribbean Telecommunications Union Secretariat in Port of Spain in the areas of spectrum management and internet governance. He has also successfully conducted consultancies for several of the member governments of the CTU. Mr. Cassimire has a bachelor's and master's degree in engineering, as well as a diploma in management studies from the University of the West Indies, St. Augustine. He is a fellow of the Telecommunications Engineering and Management Institute of Canada, TEMEC, and an alumnus of the Advanced Management Program in INSEAD, Fontainebleau, France. I'd like to welcome to the podium Mr. Nigel Cassimire from the CTU.
Thank you very much, Peter. And now that my telecommunications credentials have been established, I'm going to moderate a panel on financial technology. I think this, the last panel was a perfect segue into this one because, as was stated, our topic is getting the regulatory environment right. And there was a lot of discussion in the last panel about, what regulators can do and sandboxing and so on. And we got the impetus for innovation from Dr. King's presentation in terms of de-risking and try to establishing some urgency for us to do something. And Dr. Maurice McNaughton also made some subsequent comments that I am sure he will be elaborating upon in this particular panel, where he is the featured speaker. Without necessarily reintroducing Dr. Maurice McNaughton, who was just introduced on the previous panel, I'll just say that he is attached, I'll just specify that he is attached to the Mona campus of the University of the West Indies in the Mona School of Business and Management, where he works and does his research. So he is going to be kicking us off in terms of the discussions of this panel with respect to getting the regulatory environment right. So I would just reintroduce to the podium, or at least introduce for the first time to the podium because he sat there for the first time, Dr. Maurice McNaughton to give his opening presentation. I'll introduce the rest of the panel when he's through. Please welcome.
Thank you very much, Nigel. Good afternoon again, everyone. Let me just reiterate my pleasure at being here and so the ITU for inviting me to participate in what is already a quite interesting forum, and to thank Shiva as well for facilitating. And he did ask me for this particular discussion to talk a little bit about the experiences we've had in Jamaica, because sometimes the conversations and the discourse on a topic such as this, for instance, can wander off into the speculative and talk about the technology and speculate about what regulation should do and normative approaches. So I'll take the opportunity to share some perspective on some of the experiences we've had in Jamaica. And I want to frame it this way. And again, some of these sort of themes emerged. Sorry, Shiv, we didn't get the updated presentation, but that's okay. We'll work through it. Yeah, I wanted to frame it along these themes, starting with the idea that context matters, which we saw at the end of the last presentation. So my remarks are going to be specifically around some of the evolving activities in Jamaica. Secondly, institutions do matter, and the effects of regulation can be twofold. It can either be an enabler or a constraint. And thirdly, I think collaboration is really important. And I think especially for the Caribbean, again, to the tail end of the preceding session, focused on really wanting to explore opportunities for public-private partnership approaches to building things that are relevant to our context. So I framed the remarks broadly along those lines. And one of the interesting things about context, in Jamaica, around about 2011, we did a study at the university to try and understand the nature of the unbanked, because that's an important part of context. I think many studies have shown that the degree of unbankedness, if there's such a word, provides different impetuses for the emergence of things like mobile payment systems. And so what we saw in Jamaica, the unbanked in the traditionally defined use of the term was around 34%, which means that 34% of the adult population did not have a presence in the formal banking system, which is not bad for a developing country. I think we heard earlier from the central bank governor that in Trinidad it was around 20%. And we know it may be different in other Caribbean islands, but that was about 35%. So that's not bad. What was really interesting in terms of the findings from this study is that of the 65% or so banked, only about 14% of those have access to transactional accounts. Now, let's understand what that means, right? Because very often when we speak about inclusion, we talk about people who have a presence in the banking system. But what this means is that over 80% of adult Jamaicans have limited access to a low-cost, efficient, and easily accessible payments channel. So me having a savings account in a bank or in a credit union means that I'm counted as one of the financially included, but I can't do anything with it besides put money in and take money out. I cannot do transactions. So what this represents for us is, in our context, the really important opportunity is payments, electronic payments, mobile payments. And in fact, again, we've seen some of these studies which show a strong correlation between countries with high levels of unbanked and the impetus for mobile payments. So, you know, the Jamaica case clearly is a case for that. Now, you know, people like to study M-Pesa, and we're no different. I just want to share this trajectory, you know, from M-Pesa between sort of 2006 when Safaricom approached the central bank and the central bank between September 2006 and January 2007. That's what, about 5 months. Conducted their detailed assessments and due diligence and came out with the legal opinion that M-Pesa is not banking business. You can proceed and let's see what happens. So by February 2007, they issued a letter of no objection to Safaricom. And the rest is history, right? I mean, we've seen what's happened between when M-Pesa was launched in March 2007. By August 2007, there were nearly 10,000 new registrations per day. After 2 years, 7.7 million M-Pesa accounts, 23,000 agents, presence in more than 2/3 of Kenyan households. And the interesting thing about M-Pesa is that it's not just a solution for the unbanked. 50% of M-Pesa users are banked because it is fundamentally a utility for the delivery of financial services that's far more convenient than the other mechanisms that existed in Kenya. So, you know, people study this all the time, and this is something that we say, how do we bottle this and bring this to our own economies? Now let's look at the equivalent trajectory in Jamaica. So around 2011, there was a UA-led research study which generated the numbers I showed you earlier. And we worked very closely with both the financial banking sector and the telecom sector to understand the opportunity for mobile financial services. April 2013, the Bank of Jamaica issued guidelines for electronic retail payment services, which provided the operating parameters for, broadly speaking, electronic retail payment services under which mobile payments was governed. And then between then and 2015, 13 applications from various entities, they authorized several field pilots. By June 2014, the Banking Services Act, which provides for agency banking, which is seen as critical to the success of mobile payment systems. So between September 2013 and December 2016, we had these pilots and testing between a number of operators. And by the end of last year into February 2017, we had the launch of three mobile money services. Now, for some of us, this is a tedious process. There are some of us who have described it as pedantic, but it was a very deliberate process by the regulator to work with operators to figure out what works, what makes sense, and to evolve their approach to mobile payments. So it means that at this stage we have 3 players in the market. And if you look at some of the institutional artifacts, again in Kenya, it was a very sort of light touch adaptive approach. And they in fact issued their agency guidelines in 2011. That's long after M-Pesa had been launched. So they were prepared to proceed and to observe what happened. And in Jamaica, you see far more activity in terms of the institutional regulatory instruments that were evolved to govern mobile payments. So it brings this interesting idea that I raised earlier, that institutions and technology are interdependent, and they both set boundaries on what we can do in terms of our social behaviors, in terms of economic exchange, and so forth. And we're at a stage today where the opportunities that information technology as a boundary has far exceeded what our institutional mechanisms allow for. And so you have this gap between what our institutions allow and what technology allows. And so the question is, what do we do with this gap? This gap either represents opportunities for innovation, or it represents space for either unethical or illegal practices relative to what is defined. And so the question is, what do we want to do with that? So institutions matter. Legislation, regulation, and technology are interdependent institutional actors. I think that's the key point I want to make from that. And interestingly, there's a path dependency that influences institutional effects. So in Kenya, the regulatory framework was less mature, in fact, than the regulatory framework in Jamaica, and I think countries like the Caribbean. And so it sort of left them the opportunity to be a lot more flexible, a lot more adaptive. So the moderately loose regulatory structure facilitated the development and success of the M-Pesa system. And the quote earlier, conservative regulation can be the enemy of innovation. So ideally, we want a kind of regulatory response that can address the multiple goals of financial inclusion, innovation, and entrepreneurship, while of course maintaining stability. That is, in decision sciences terms, that's a optimization problem that is non-trivial. So anyway, institutions matter, and they matter greatly. So for us, connecting the dots, if we look at the goals of what we're trying to achieve from this, there's financial inclusion, there is innovation, and there's more efficient commerce. My conviction is that by far the most important are the latter two. If you think of economies as bundles of transactions, then the more efficient you make each individual transaction, the more efficient the aggregate economy is, and that's what mobile payments does. It makes transactions far more efficient. And then, of course, one of the things that we often lose sight of with M-Pesa is that around the M-Pesa mobile payment system, a whole sea of financial innovation has grown up in Kenya, which is quite impressive, actually. some of the best innovations in the developing economy has emerged from Nairobi. So it is not just to facilitate transactions, but also innovation. So the question that emerges, if all of these things, who, once we get past regulation, who, in a proverbial sense, bells the cat? One of the discussions we're having in between sessions is, how do we establish these sandbox? Who plays a role? How does it get funded? Is, for instance, the issue of interoperability going to be public infrastructure? Is one of the private operators going to be the dominant player that establishes interoperability? Or in the case of Jets in Jamaica or Links in Trinidad, all of the operators come together and establish such an entity? Who bears that cat for mobile payments? And what's the role of regulation in making that happen? So I mentioned we have this, we've been having this discussion in Jamaica about let's take our PATH system, and PATH in Jamaica is the term for our social payment system, Program for Advancement Through Health and Education. It's a conditional cash transfer program where some 375,000 beneficiaries are paid on a monthly basis using checks. So that every month or every other month, I believe, 375,000 checks are produced by the government, sent to the post offices, and people swarm the post offices to collect their checks. And we think this is such an opportunity to bring a bundle of transactions to the mobile payment system. So we've been having this conversation about G2P and how the government focuses on moving from that very manual intensive operating system to one that's enabled by mobile payments, where you have a mobile payments services provider that sits in the middle and facilitates those payments. And we believe the benefits are obvious in terms of reduction in labor intensity, promoting socioeconomic welfare, but more importantly, we believe it could be a significant catalyst for scalable mobile financial services. Because what we do know is that the operators that have come to market, having navigated through the regulatory, in the past I use the term regulatory morass, but I'll be more generous and say the regulatory trajectory, having come to market, are now having to grapple with the issue of customer acquisition. And the challenge we have in Jamaica at the moment is you have 3-4 operators battling for already small market, which is more fragmented because of the lack of interoperability. So from a commercial standpoint, it makes little sense to me. And so we're saying, and again, the discussion we started in the last session, does the government have a role to play in stimulating that large-scale digital financial ecosystem by bringing to bear a bundle of transactions? Governments are the biggest transactors, by bringing to bear a significant infrastructure and network of post offices across the island, and of course the regulatory aspect, so that government is not just a policymaker, but is also an operating actor. Oh, I'm sorry, I was pointing at the, yeah, anyway, not to worry. So, and we looked at this having studied many different jurisdictions, what happened in Haiti with Digicel and Trotro Mobile, what happened in Kenya, what happened in Argentina and Brazil and a number of places. And it's clear that regulation is just a starting point, but one has to ensure that the market is ready, consumers are ready, and the idea of establishing partnerships and institutional alignments that can be brought to bear on this as a specific initiative. And we believe it makes for a compelling case in Jamaica. There are some other remarks I wanted to make about the role of the consumer in all of this, but I see the version of the slides didn't make it. So let me close on that point. With all this preoccupation around the regulatory framework and operators coming to market with technologies, very often we tend to overlook the consumer and the consumer's role in making this happen. At the end of the day, you have to recognize that digital payment systems are a choice that consumers make as to whether they use it. And if you don't come to market with something that is better or perceived as better than cash, then they'll continue to use cash, right? So there are many aspects around the role of the consumer, their readiness, how do we protect the consumer with these new kinds of systems that are also part of the regulatory responsibility. So it's not just getting the frameworks right so that we can bring providers to market, but providing the mechanisms to deal with issues of privacy, deal with issues of consumer protection, deal with issues of security, data security, for instance. So I just wanted to frame that in terms of the regulatory framework and look forward to the remarks from my colleagues on the panel. Thank you.
Thank you very much, Dr. McNaughton. Just before we get to the panel, a couple, clarifications, I guess, in terms of the thing that I'd like to get. I seem to notice that in Kenya, the conclusion was this mobile payments thing was not banking business, whereas it was the opposite in Jamaica. What makes it banking business from not banking business? Or what accounted for that difference in your view?
Yes, I think that's one of the interesting things that differentiates Kenya from some of the more recently emerging jurisdictions. Mm-hmm. So Safaricom, which is the dominant telecommunications player in Kenya, were the ones who brought the M-Pesa as a proposal to the central bank. And the central bank thought that it was appropriate at the time to allow Safaricom as a telecoms player to proceed. Mm-hmm. So there are three models that you could look at in terms of mobile payments. There is bank-led, there's telecoms-led, and then there are hybrids in between that. M-Pesa is one of the examples which is telecoms-led. Certainly in the Jamaica conversation, the dominant telecoms players also made their own overtures to the central bank, but the central bank decided that this is banking business and it must be anchored in the banking sector and regulated accordingly.
Okay, a couple others. So I gather from your presentation as well that the growth trajectory in Jamaica is not quite as dramatically, is not quite as exponential as in Kenya. And you mentioned multiple agents that are not interoperable, so you have a kind of segmented market there. And I suppose when we open the floor, we can discuss whether maybe regulatory environment has a role to play as well to help the market to grow. Yeah.
My remark on that. So it is still early days. I mean, the operators have really just come to market over the course of the last year. But, you know, M-Pesa had the advantage that Safaricom was the initial single player and they were the dominant telecoms player. So they could take advantage of scale. So people who talk about what made M-Pesa successful is adaptive regulation, latent demand because of the challenges taking place in Kenya at the time, and scale. That Safaricom was able to come to market with scale. In our context, in the absence of interoperability, we're going to struggle for any kind of scale, even with small markets, because you're taking small markets and you're further fragmenting them with operators that are not interoperable for now anyway.
Mm-hmm. And finally, in terms of clarification, you mentioned the example, or you said checks is a key form of payment, and you were proposing that maybe mobile payments would be more efficient rather than checks.
That's in terms of government social services.
Right. What happens with the checks? Don't the checks get deposited? What happens if you don't have a bank account? Do the checks cover both the banked and the unbanked? And what about direct deposit as opposed to checks?
So specific to this example that we've looked at, the social benefits, checks are produced, they are sent to the post offices as points of distribution. Persons go to the post offices, collect their checks. And remember, these are relatively small payments. Having collected their checks, then they either have to go to a bank to change those checks, or they go to some retail operator that is prepared to take those checks as tender. So that makes for a very manually intensive process. And the proposal here is that in terms of the volume of transactions and the significant opportunity for efficiency improvement, that the government should look at moving that to mobile payments.
But do they use the direct deposit at all?
So about 5 years ago, they exercised again, let's call it a pilot using debit cards. So that they issued payments on debit cards. So persons could go get their payments and go to the ATM and change them. So the interesting thing is that in the course of 5 or 6 years, the take-up on that was only 9%. And it leads to a very interesting question, right? Because for those who have taken up that card option, they say this is great. I mean, it's so much better than check, so much more convenient, but still the take-up is only 9%. And so it just leads to the notion that the assumption that you build it and people will run coming is a flawed assumption. There has to be a very deliberate process in terms of the way we deploy these systems.
All right, thank you.